Oracle of Omaha Warren Buffett and second richest man Elon Musk, who do you think got it right in business? Two of the most successful businessmen, Buffett and Musk, seem to be at odds in terms of business ideals. You surely would not want to miss this. He's winning, that's America. You can't dream it up, it's astounding. Warren Buffett said of Tesla CEO Elon Musk in a mid-April interview in 2022. In the said interview, Musk had several positive comments about the Tesla and SpaceX CEO. When Buffett was asked about Musk, noting Tesla's market value compared to competitors, Buffett responded, "That shows what America produces. I mean, Elon, he's taking on General Motors, Ford, Toyota, all these people who've got all the stuff. And he's got an idea, and he's winning. That's America. You can't dream it up. It's astounding," Buffett said. Buffett had previously been more circumspect about Musk, criticizing him in 2018 for taking on large auto companies. "People like his cars and everything," he said in a 2018 interview. "He's trying something to improve a product, and I salute him for that. And the American public will decide whether it's a success, and it's not easy." In an interview that aired in April 2020, Buffett said he would not invest in Tesla even though he thought he had done some remarkable things. However, despite his positive outlook for Tesla and good words for its CEO Elon Musk, Buffett appears to be a believer in BYD and GM. While Berkshire has never invested in Tesla, the company owns shares from Chinese electric vehicle stock BYD company ADR and General Motors Company. As for Musk, he has been critical of Buffett in the past, once calling his value investing style lame on a Tesla earnings call. "To be totally frank, I'm not his biggest fan, but he does a lot of capital allocation. He reads a lot of annual reports and accounting, and it's pretty boring, really," Musk said of Buffett on the Joe Rogan Experience podcast. The two billionaire businessmen basically have varying views and ideologies in terms of business. That said, it is not entirely surprising that Buffett is not a fan of Tesla, given he has always taken a value investing approach to the market and shield away from high growth stocks with high earnings multiples. In light of this, many are wondering who's got it right on EVs, Musk or Buffett. News of Berkshire Hathaway-backed BYD blowing past its competition as it could start supplying batteries to rival Tesla recently made noise. Over a decade ago, Elon Musk scoffed at the idea that China's BYD Co. was a legitimate competitor. Today, the tables might have just turned. Now, Warren Buffett-backed BYD is set to wash out its closest rival in China, Tesla Inc. A BYD executive recently said that his company was preparing to supply batteries to Tesla very soon. The potential deal will catapult BYD to become one of the world's most prominent and largest EV and battery manufacturers. Others say that it is a smart move. BYD has upped its game over the past 2 years with a range of EVs and higher technology lithium iron phosphate batteries, allowing it to grab global market share. The company plans to sell 1.5 million units this year, pushing it to almost a third of the China EV market by the end of 2022. In April 2022, BYD ranked among the top electric vehicle makers by sales and became the third largest car maker by market value in the world. The same month, it sold over 46,000 EVs compared to Tesla's 1,728 and announced it had stopped making fuel combustion vehicles, a first by any manufacturer. In May 2022, even with Shanghai locked down, its EV sales rose 250% from a year earlier. BYD's arrangement with Tesla hasn't been outlined clearly yet, but the Chinese company is likely to supply Tesla with its Blade battery, an innovative take on the decades-old lithium iron phosphate formulation. It has focused on this chemistry instead of the nickel-cobalt manganese variety used by several peers, because it is more efficient in terms of space, energy density, and range. It's safer too, with a newly introduced cell-to-body structure. Meanwhile, the EV and battery maker has largely been able to circumvent supply chain issues because of its tight relationship with suppliers and has consistently rolled out a line of cars. As part of its vertically integrated business model, BYD has been actively looking to secure resources like lithium. BYD is doing what Tesla wants to do: make batteries and secure resources up and down the supply chain. It's also already achieved its rival's goal of becoming one of the biggest EV makers in the world. Musk's firm has had a tough time getting its in-house 4680 battery off the ground and is still scouting out locations across the world. While that's prescient, BYD is further ahead. Sure, its cars may not be as snazzy as Tesla's yet, but they are selling. Now, their batteries are in Teslas too. Overall, both Elon Musk and Buffett are firm in their beliefs when it comes to the EV industry. Both are experts in their own rights and have their own respective sound arguments. Tesla is considered an industry leader, and not just because of its market cap, which surpasses all other auto stocks. During the third quarter, Tesla accounted for a 65% share of EVs registered in the United States, according to S&P Global Mobility, a division of S&P Global. Buffett is a strong believer that industry leaders tend to keep winning as long as they have a sustainable moat. However, Tesla does not tick Warren Buffett's checklist for a worthy investment. As much as Buffett is hung up on moats, Tesla lacks a true moat. It can be noted that Tesla CEO Elon Musk explained why he is not like Warren Buffett, as two of the world's richest men have divergent approaches to business. The Tesla boss has in the past dismissed Buffett's advice to investors to find companies with moats, or buffers around them. In 2018, Musk said moats are lame and that it is the speed of innovation that matters, CNBC reported. For that reason, it's worth paying attention when these two very different multi-billionaires have the same advice. Warren Buffett and Elon Musk aren't exactly two peas in a pod. They differ significantly in age, demeanor, and interests. About the only thing Buffett and Musk seem to have in common is that they both rank among the wealthiest people in the world. Still, Buffett and Musk appear to at least have a common ground when it comes to their investing ideologies. For one, both businessmen advise on investing in what you know and believe in. Although Buffett has sometimes been criticized for not buying tech stocks more frequently, he has been steadfast in only investing in businesses that he understands. In his 2013 letter to Berkshire Hathaway shareholders, Buffett wrote that it's vital that we recognize the perimeter of our circle of competence and stay well inside of it. Knowing the business well isn't enough, though. Even though he's known as a value investor, Buffett thinks believing in a company is more important than its valuation. As he stated in his 1989 letter to Berkshire shareholders, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Musk is on the same page. He's known more for his entrepreneurship than his investing. However, the Tesla CEO tweeted in May 2022, "Buy stock in several companies that make products and services that you believe in." Furthermore, both Musk and Buffett agree on the idea to hold for the long term, when possible. When many people think of long-term buy-and-hold investing, Buffett comes to mind, which isn't surprising. He's spoken a lot about having a long-term mindset. The Oracle of Omaha even wrote in his 1998 letter to Berkshire shareholders, "Our favorite holding period is forever." Buffett hasn't always held on to the stocks that he's bought for Berkshire's portfolio for long periods. He has sometimes appeared to deviate from his own advice. But it's important to understand the context of that famous quote about holding stocks forever. Buffett prefaced the statement with a condition. The holding period of forever is only for outstanding businesses with outstanding management. When Buffett no longer believes that a business or its executive team is outstanding, he'll sell. Musk shares this philosophy. In his aforementioned tweet earlier this year about buying the stocks of companies you believe in, he stated, "Only sell if you think their products and services are trending worse." Another point of similarity between the two famed billionaire businessmen is that they don't worry about what the overall market does. Even when the stock market was tanked as a result of one of the greatest financial crises in history in October 2008, Buffett wasn't worried. He wrote in a New York Times opinion article, "A simple rule dictates my buying. Be fearful when others are greedy and be greedy when others are fearful." Musk seems to fully agree with Buffett on this principle. He tweeted 7 months ago, "Don't panic when the market does." The S&P 500 was down 14% below its previous high when he made the statement. Overall, Elon Musk and Warren Buffett are two different individuals with very different beliefs and ideologies. Subscribe to Tesla Stock for more.